Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Monday, the 20th of February. I'm Daniel Lam, your host for the podcast. The Goldilocks narrative on U.S. risky assets has been getting a bit mixed over the last few sessions. Starting from the stronger than expected non-farm payroll at the start of the month, and then the trio of figures last week that beat expectations, i.e. the US CPI, retail sales, and PPI, had led to talks about a US soft landing. However, at the same time, we've also seen the timing of the rate cut expectations being pushed out, as well as increasing expectations of more rate hikes to come from the Fed. As a result, the S&P 500 index has been struggling in the range between 4060 and 4195, and the DXY dollar index has been edging stronger and potentially testing the key 105.61 resistance level over the very short term. Now, a stronger US dollar potentially, say over a 4 to 6 weeks horizon, is likely to lead to fund flow back into the US and thus affecting the performance of our overweight equity region in Asian ex-Japan. This is compounded, of course, by the balloon incidents. The US administration, over the course of the incident, almost had to demonstrate a hawkish policy stance on China, which tends to dampen investors' sentiment in Chinese and Asia ex-Japan equities. Now, looking at specifically Chinese equities, the rally till end of January was mainly driven by the shift in China's COVID policy response, rather than an acceleration of growth. In other words, it was due to expectations and positioning rather than fundamentals. However, as investors flocked to Chinese equities to the point where positioning had become overcrowded, growth numbers really need to deliver in order to add fresh fuel to Chinese equities. Thus, be patient. Like we discussed in the podcast last Tuesday, we see Hang Seng Index potentially correcting to around 19,300 to 19,600 level, which will give opportunities for investors to buy Hong Kong Chinese equities. In the meantime, for this week, investors will be looking for more clues from the global PMI release on Tuesday and the US GDP figure on Thursday. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.